Hi, everybody, and welcome to week number 7. And the big news this week is to finish your test, your first test, unit test, I should say, by 11:59 on Monday. And if you haven't already completed it, you need to complete the test, or test number 1 at the very beginning of that was made available at the beginning of the term. You will not be able to take this unit test without completing that and signing up for Honor Lock. So I'll just keep that in mind. I hope you read the announcements I put out, a little bit of preparation for the test. I'm sure you'll do fine if you've been doing well on the homework, but make sure you also understand some of the concepts and the things we've read about in the text as well. You'll be in good shape. And no rest for the wicked. We move forward, and we're going to talk about Chapter 9. Chapter 9 is an introduction to a new section in the class. We're moving away from working capital management, or the short-term view of how we do financing, to a longer-term view of how we do financing, which is we're going to call the capital budgeting process. And there's several different chapters in here that matter, but this is when we think about extending our analysis on periods beyond just the current one. So, and again, that's why we get away from the current aspects of the balance sheet and start talking about longer term types of decisions. And at the core of this, and what's really, really important, is in Chapter 9, is probably the kind of the cornerstone of all finance, and that is the time value of money. So you're going to look at that in some detail in this, as we start talking about the capital budgeting process here. Okay, so you're going to want to be able to explain the time value of money and how a dollar received today is worth more than a dollar received in the future. Sometimes that's a little bit of a confusing concept, so just kind of take your time working through the problems, kind of understand what that really means. But it's an important concept that we have to keep in mind. You want to be able to recognize that future value is based on the number of periods over which the funds are to be compounded at a given interest rate. I'm going to use go sideways here a little bit. If you ever bought a house and you took out a loan, part of the truth of lending documentation that you get throughout that process tells you the total cost of the loan, and when you see it, you'll fall out of your chair. It's amazing how expensive your house looks when you look at it from that perspective, borrowing money over a 30-year period of time. So anyway, you can't really worry too much about that, but you need to really understand what that represents, and that's a good way of thinking about it. You want to recognize that the present value is based on current value of the funds to be received. That'll make sense as you get into doing some of the work on that. You want to be able to calculate the yield on an investment, rate of return, annuity due, and payments required. These are all very standard things you can do either in Excel or you can do on a standard financial calculator. So you shouldn't have too many problems doing those types of problems. And then you want to be able to recall that compounding or discounting may take place on a less than annual basis, and you have to kind of figure out how to do that. It's a little bit tricky, and you do have to read the problems pretty closely and understand exactly what terms they are outlining when you do that, because it does affect how you actually do the calculations. So that's really what you're going to do this week, outside of preparing for and taking the test, and I wish you the very best of luck with that. But you're going to start learning about the time value of money. In my announcement, I put out something, and for those of you who haven't contemplated it, it shows the incredible power of the time value of money from an investor standpoint, and that if you invest money now, what it'll be worth over a longer period of time is quite a bit more, and you'll get a sense of that. But said another way, I know some of you might be just starting off in your careers, and you're saying it's like, well, what's he talking about? But I want you to start thinking about retirement now, and thinking about how you're going to fund your retirement after basically, essentially, when you retire, amongst other things, you lose your source of income from whatever your employment is at that time. So you have to think about how you're going to cover your costs over that period of time, and understand how much to invest starting now. But you're going to see a chart in there that's pretty sobering, honestly. It's the number of people who haven't even started saving for retirement when the time value of money is not on their side. So it creates a very difficult situation for those folks. So a little planning now goes a really long way into the future, and so pay close note to that. It's something I really encourage you to do. I've heard lots of people say, I don't have funds for to be able to invest from retirement standpoint. But if you are working and you file an income tax return and you get money back from the government, which is not found money, that's basically what you overpaid the government all throughout the year. And when you get that money in, what I would suggest you do is take that money and in your return, and instead of going out and buying something, invest that money. You didn't have it the day before you figured out how much it was going to be. So guess what? It's you've got the funds now. You weren't counting on them, so take those funds and invest them into an easy way to invest in, for example, equity or the stock market is to buy an equity fund that invests in one of the stock market indexes, like the Dow Jones Industrial Average or the S&P 500. Easy ways to invest in the stock market without putting a lot of money in, and take advantage of the growth that's been taking place with that. So anyway, I didn't mean to go off into personal finance, but it does illustrate very well what the time value of money concepts are. Best of luck on the test, and best of luck going through the work. And if you have any questions, certainly let me know. I'm going to hang around probably a little extra long tomorrow on my office hours, so in case anybody is having some difficulties getting into the test or doing something like that, we can resolve it. To remind you, those office hours are between 11 a.m. and noon on Mondays. Okay? Best of luck, and we'll talk to you next week.